Manufacturing PMIs, economic indicators. Leading indicators tend to peak, highest level, and trough, lowest level before overall economy, determining the direction the economy is going to take. Manufacturing PMIs. The S&P Global US Manufacturing PMIs is compiled by S&P Global for responses to questionnaires sent to purchasing managers in a panel of around 800 manufacturers. The headline figure is the Purchasing Managers Index, PMIs, which is a weighted average of the following five indices: new orders 30%, output 25%, employment 20%, supplier delivery time 15%, and stock of purchases 10%. For the PMI calculation, the supply delivery times index is inverted so that it moves in comparative direction to the other indices. Purchasing Manager Index (PMIs) is an index of the prevailing direction of the economic trends in the manufacturing and service sectors. It consists of the diffusion of index and summaries whether the market conditions as viewed by purchasing managers are expanding, staying the same, or contracting. The index varies between 0 and 100 with a reading above 550 indicating an overall increase compared to the prior month and below 50 an overall decrease. Reflects on clients. This is a good to know as an investment dealer broker as it may dictate which direction economic orders are progressing and ascertain deliberating if individual stock equity is going bullish or bearish. Manufacturing PMIs. Manufacturing is the most important sector and accounts for 78% of total production. The biggest segments within manufacturing are chemicals 12% total production, food, drink and tobacco 11%, machinery 6%, fabricated metal products 6%, computer and electronic products 6%, motor vehicle parts 6%, mining and quarrying account for 11% of productions, and utilities account for the remaining 11%. Consists of raw materials or parts into finished goods through the use of human tools, human labors, machineries, chemical processing, simplified processing. Simplified makes of good or service to be sold to consume upon completion. Anything under 50 is in manufacturing PMIs is contraction. Anything above 50 is an expansion. Contraction shrinking, expansion growing. Italy manufacturing industry is in contraction and decreasing. France manufacturing industry is in expansion and increasing. Eurozone manufacturing industry is in contraction and increasing. Japan manufacturing industry is in contraction and decreasing. UK Britain manufacturing industry is in contraction and increasing. Germany manufacturing industry is in contraction and increasing. USA manufacturing industry is in contraction and decreasing. Canada manufacturing industry is in contraction and increasing. China's manufacturing industry is in contraction and decreasing. Italy manufacturing industry is increasing but still in contraction territory. France manufacturing industry is decreasing but still in contraction territory. Eurozone manufacturing industry is decreasing but still in contraction territory. Japan manufacturing industry is decreasing and still in contraction territory. Britain UK manufacturing industry is increasing and in contraction territory. Germany manufacturing industry is increasing and in contraction territory. USA manufacturing industry is increasing and in expansion territory. Canada manufacturing industry is increasing and in contraction territory. China manufacturing industry is decreasing and in contraction territory. Summary: most nations in this chart are contracting except USA, meaning that most countries are experiencing a period of low growth. Some show signs of some showed positive signs in numbers within contraction but didn't cross the expansion mark, which is a positive sign that things may be turning around in these countries, stating that the world's biggest economies by GDP, there is a common denominator of lagging growth, recession, etc. Service PMI's economic indicators. Leading indicators tend to peak, highest level, and trough, lowest level before overall economy, determining the direction the economy is going to take. Service PMIs, flash service PMIs is an early estimate of the services purchasing manager index PMIs for a country, designed to provide an accurate advanced indication of the final services PMI data. Reflects on clients. This is good to know as an investment dealer brokerage as it may dictate which direction economy orders are processing and an association deliberating if individual stock equity is going bearish, bullish or bearish. Service service PMIs is a track variable such as output, new orders, employment, prices across key sectors, servicing purchasing manager index PMIs for a country designed to provide an accurate advanced indication of final services. PMI data is based on surveys of more than 400 senior purchasing executives. The survey covers transportation and communication, financial intermediaries, business and service, personal services, computing and IT, hotels and restaurants. They track variables such as output, new orders, employment, prices across key sectors. Anything under 50 is service PMI is in contraction. Anything above 50 is in expansion. Contraction, shrinking, expansion, growing. Italy manufacturing industry is in expansion and decreasing. French manufacturing industry is in expansion and increasing. Eurozone manufacturing industry is in expansion and increasing. Japan manufacturing industry is in expansion and increasing. UK Britain manufacturing industry is in expansion and increasing. Germany manufacturing industry is in contraction and increasing. USA manufacturing industry is in expansion and increasing. Canada manufacturing industry is in contraction and decreasing. China manufacturing industry is in expansion and increasing. Italy's service industry is increasing and still in expansion territory. France service industry is increasing and still in a contraction territory. Eurozone servicing industry is increasing and still in expansion territory. Japan servicing industry is increasing and still in expansion territory. Britain UK service industry is decreasing and still in expansion territory. Germany's servicing industry is still in contraction territory. USA service industry is decreasing and still in expansion territory. Canada service industry is increasing and still in contraction territory. China service industry is decreasing and still in contraction territory. Summary. Majority of major big countries in the world, except for some countries in Europe and North America, France, Germany, Canada, China, are stating growth in service sectors, meaning output in and orders is going in a positive direction, increasing. Economic indicators, composite PMIs. Leading indicators tend to peak, highest level, trough, lowest level before overall economy, determining direction the economy is going to take. The composite PMI is a weighted average manufacturing and service sector PMIs for a given geography or economy, produced by S&P Global. Weights are derived from official data relating to each sector's contribution to GDP. Value added. Anything under 50 in composite PMIs is in contraction. Anything above 50 is in expansion. Expansion, growing, contraction, shrinking. Reflects the clients is this is good to know as an investment dealer broker as it may dictate which direction economies orders are progressing and association deliberating if individual stock equity is going bullish or bearish. Italian composite industry is increasing and in expansionary territory. France composite industry is decreasing and still in contraction territory. Eurozone composite industry is decreasing and still in contraction territory. Japan composite industry is decreasing and still in contraction territory. Britain UK composite industry is increasing and still in contraction territory. Germany composite industry is increasing and still in contraction territory. USA composite industry is increasing and still in expansion territory. Canada composite industry is increasing and still in contraction territory. China composite industry decreasing and still in contraction territory. Summary. So major countries like US are in expansion alongside Italy, and except rather countries such as most notable Japan, China, and UK, Britain, staying in contraction. In in the composite sector, meaning manufacturing services, is seeing a downfall in European major economies and Asia, Japan, and China. May signal close to an entry point in stocks in Europe, and as valuations of stocks have dipped due to soft landing and recession woes. Housing starts. Leading indicators tend to peak, highest level, trough, lowest level before overall economy, determining the direction the economy is going to take. Housing starts. In Canada, a housing start is defined as the beginning of construction on the building where the dwelling unit will be located. This can be described in two ways usually. The stage when the concrete has been poured for the whole of the footing around the structure, or a visionary stage where the basement will not be part of the structure. Reflects on clients. This is good to know as an investment dealer broker, as it may dictate which direction economy orders are progressing and ascertain deliberating if individual stock equity is going bullish or bearish. Housing starts. The U.S. Census Bureau published estimates of U.S. housing starts on the 12th day of business each month based on the surveys of home builders partially funded by the U.S. Department of Housing and Urban Development. One, the new residential construction reports also includes housing completion data as well as counts on building permits derived from the separate survey of building permit offices. Japan annually housing starts increased by 59.2 thousand units starting month over month, February 2004 to January. U.S. annual housing starts increase expanded month over month, February 2024 from January by about 0.147 million units to 1.521 million units. Summary: growth was steady in the first and third largest countries in the world in regards to housing starts. Japan showed sluggish results in housing, and U.S. was stating that the growth in their economy was growing moderately, which is good. So investment in U.S. real estate, as it shows bullish prospects. Maybe good sign for REITs and other mortgage stocks, equities, as the individual industry that makes material for home building will have continued productivity, maybe an increasing trend for meantime. As recovery may be growing steam, mutual fund REITs. Gross domestic product, GDP, coincidental indicator, flow in tandem with the economy. GDP is the gross domestic product, is the total market value of all final goods and services produced in the country over a given period. Economic growth is measured by the increase in GDP from one period to the next. Monthly and quarterly GDP reports are used to keep track of short-term activity within the markets, whereas annual reports are used to examine trend changes in production and fluctuation in standard of living. The gross domestic product (GDP) is equal to total expenditures of all final goods and services produced within a country in a specific period of time. In general, what a nation produces more goods or services, its standard of living improves. However, if an increase in GDP is simply the result of higher prices, the cost of living increases, but the standard of living does not improve. Economists term this condition, raising prices, as inflation. Reflects on client. This is good to know as an investment data broker, as it may dictate which direction economy orders are progressing and ascertain deliberating if individual stock equity is going bullish, bearish, or how to structure a client's portfolio. Gross domestic product is the total monetary value of all goods and finished goods and services produced within the country's borders in a specific time period. As a broad measure of overall domestic production, it functions as a comprehensive scorecard of a given country's economic health. Italy GDP gross domestic product year over year is expanding by a change in negative 1.378 current to 0.6%. France GDP gross domestic product year over year is expanding by 0% change to a current 0.7%. Eurozone GDP gross domestic product year over year is expanding by negative 1.9 change current to 0.0%. Japan GDP gross domestic product year over year is expanding by a change in 1.4 negative to current 0.4%. UK GDP gross domestic product year over year expanding by a change in 0.8% negative to a change to current of 0.2% negative. Germany GDP gross domestic product year over year is contracting by a change in 0.6% negative current to 0.2%. US GDP gross domestic product year over year expanding by 2.9% change current to 3.1%. Canada GDP gross domestic product year over year expanding by a change in 1.27% current to 0.93%. China GDP gross domestic product year over year expanding by 0.3% change to current 5.2%. Italy GDP gross domestic product quote unquote expanding by a change in 0% current to 0.2% month over month. France GDP gross domestic product quote unquote expanding by 0.1% change current to 0.1% month over month. Eurozone GDP gross domestic product quote unquote expanding by 0.2% change current to 0.1% month over month. Okay, Japan gross domestic product quarter over quarter expanding by 0.9% change, current to 0.1% month over month. Uh, UK Britain GDP gross domestic product quarter over quarter expanding by 0.4% change over current to 0.3% month over month. Germany gross domestic product quarter over quarter is contracting by 0.3% change, current to 0.3% month over month. USA gross domestic product is quarter over quarter expanding by 0. Expanding by 1.7% change negative, current to 3.2% month over month. Canada GDP gross domestic product quarter over quarter expanding by 0.3% change, current to 0.2% month over month. China GDP gross domestic product is quarter over quarter expanding by negative 0.5% change, current to 1% month over month. Summary: GDP was rising approximately 2% in nearly every economy in in this chart year over year last year. This year, GDP was expanding by positive numbers except for Germany year over year. Secondly, Eurozone, Japan, and Germany are all in contraction quarter over quarter September start of Q3. Rest of the economies are in positive quarter over quarter Q3. Last quarter for all countries in contraction in this list of countries last quarter. This relays the point that majority of these countries' size of growth and services are growing, stating that progress in stock value may be contracting and decreasing bearish downwards. Buying opportunity to and holding opportunity for mutual funds, longer term reinvestment opportunities of dividends and capital gains. Stock capital appreciating from pullback to a long-term hold from 5 to 10 years with appreciating about 11% NASDAQ estimate and with all around stock exchanges probably 24% and for the small cap names Russell 2000 etc. Now this pullback as a kink in the economy and stock overall growth or dip to continue higher highs and pull higher highs and more bullish growth. Economic indicators, coincidental indicators, flow in tandem with the economy. Retail sales. Retail sales are an economic metric that tracks consumer demand for finished goods. Reflects on clients. This is good to know as an investment data broker as it may dictate which direction economy orders are progressing and ascertain delivering if individual stock equity is going bullish or bearish. Retail sales. This figure is very important data set as it is a key monthly market moving event. Retail sales are reported each month by the U.S. Census Bureau and indicates the direction of the economy. It acts as a key economic barometer of whether inflationary pressures exist. Retail sales are measured by durable and non-durable goods purchased over a defined period of time. Sales of the report are derived from 13 types of retailers, from food services to retail stores. Italy retail sales year over year is expanding by 0.8% to a current reading of 1% from last year's reading. France retail sales year over year expanding from 1.3% to a current negative 2.4% from last year's reading. Eurozone retail sales year over year is contracting by 0.5% current to negative 1% from last year's reading. Japan retail sales year over year expanding by 0.3% to current 2.1% from last year's reading. UK Britain retail sales year over year is expanding by 3.2% current to 0.5% from last year's reading. Germany's retail sales year over year is contracting by negative 0.8% current to negative 1.4% from last year's reading. US retail sales year over year is expanding by 4.6% current to 0.04% from last year's reading. Canada's retail sales year over year is expanding by 1.75% current to 0.95% from last year's reading. China's retail sales year over year is expanding by 1.9% current to 5.5% from last year's reading. Italy retail sales month over month is expanding by 2.1% current to 2% month over month. France retail sales month over month is expanding by 1.7% current to 0.1% month over month. Eurozone retail sales month over month is expanding by 0.7% current to 0.1% month over month. Japan's retail sales month over month is expanding by 3.7% current to 0.8% month over month. UK Britain retail sales month over month expanding by 7.1% current to negative 3.6% month over month. Germany retail sales month-over-month is expanding by 0.1% current to negative 0.4% month-over-month. U.S. retail sales month-over-month is contracting by negative 1.7% current to 0.6% month-over-month. Canadian retail sales month-over-month is contracting by 1.2% negative current to negative 0.3% month-over-month. China retail sales month-over-month is contracting by 1.4% current to 0.03% month-over-month. Summary. Year over year, last year, France and Eurozone was rising in negative numbers. France finals reading was negative. The rest overall had a positive reading and were expanding in retail sales. China, Canada, USA month over month was contracting monthly, but only Canada, UK, Britain, and Germany ended up in negative numbers over this period. Continuous slackness in Europe, UK, and Germany is a bad sign for consumers and investors as sectors seems to be worrisome for Canada also worrisome. Canada also will be troublesome for these groups. Maybe a pullback opportunity as stock business cycle recovery, maybe signal a prior support level and will probably rebound or more deep entrenched contraction. Industrial production Current indicators flow in tandem with the economy. Industrial production in the United States, industrial production measures the output of business integrated in the industrial sector of the economy. Reflects on client. This is good to know as an investment dealer broker as it may dictate which direction economic orders are progressing and ascertain delivering if individual stock equity is going bullish or bearish. Industrial production, manufacturing is the most important sector and accounts for 78% of total production. The biggest segments within manufacturing are chemicals, 12% of total production, food, drink, and tobacco, 11%, machinery, 6%, fabricated metal products, 6%, computer and electronic products, 6%, and motor vehicles and parts, 6%. Mining and quarrying account for 11% of production, and utilities account for remaining 11%. Italy industrial production year over year is contracting by negative 1.9% current to 3.4% negative from last year's reading. French industrial production year over year is expanding by 0.25% current to 0.77% from last year's reading. Eurozone industrial production year over year is contracting by negative 6.9% current to negative 6.7% from last year's reading. Japan industrial production year over year is contracting by negative 8.1% current to negative 6.7% from last year's reading. UK Britain industrial production year over year is contracting by 0.1% negative current to 0.5% from last year's reading. Germany industrial production year over year is contracting by 0.2% current from 5.5% from last year's reading. USA industrial production year over year is contracting by 1.9% current to 2.3% from last year's reading. Canada industrial production year over year is expanding by 0.71% current to 1.55% from last year's reading. China industrial production year over year is expanding by 0.2% current to 7% from last year's reading. Italy industrial production month over month is contracting by negative 2.4% current to negative 1.2% month over month. France industrial production month over month is contracting by 1.5% by negative 1.5% current to negative 1.1% month over month. Eurozone industrial production month over month is contracting by negative 4.8% current to negative 3.2% month over month. Japan industrial production month over month is contracting by 0.5925% negative is contracted by 0.5925% negative current to 1.4925 negative month over month. UK Britain industrial production month over month is contracting by 8% current to 0.2% negative month over month. Germany industrial production month over month is contracting by 3% current to 1% month over month. USA industrial production month over month is contracting by 0.1% current to 0.1% month over month. Canada industrial production month over month is contracting by negative 4.39% current to negative 3.4% month over month. China industrial production month over month is contracting by 0.6% negative current to 0.56% month over month. Summary. Every country in the chart is declining except for UK, England, Italy, Germany, USA year over year, with Italy, Eurozone, Germany, and Japan showing end figures negative, meaning those countries' national production contracting, not growing. Month over month, every country except UK, Britain, USA, and Germany showed contraction over that period. They had an end figure of month over month of all countries contracting, Germany, USA, and China, meaning industrial production declining. So the major stocks equities monopolize those sorts of industries, which is vast. These economies the economies of these countries are showing decline, which may lead to demand decreasing and starting to gain more momentum upward. We may start exiting trough recession and entering recovery business cycle. Good entry point for stock equity and keep holding position as turning bullish. Inflation, lagging indicator, trail economic action in both cases confirming a trend cycle. Inflation is a sustained trend of raising prices of goods and services across the economy over a period. In crosses, deflation is a general decrease in prices across the economy. Inflation typically a broad measure such as the overall increase in prices or the increase in the cost of living of a country. Two, prices increase and the consumer had to pay more for goods and services in the current year than they did in the previous year. Thus, the nations experienced inflation. Inflation rate is a percentage of change in the average level of prices over a given period. The Consumer Price Index (CPI) is a widely used measure of inflation. The CPI monitors how the average price of a basket of goods and services purchased by a typical Canadian household changes from month to month or year to year. Reflects on clients. This is a good to know as an investment dealer, broker, as it may dictate which direction economy orders are progressing and ascertain delivering if individual stock equity is going bullish or bearish. Inflation, Italy inflation year over year is contracting by 0.09% current to 0.75% last year's reading. France inflation year over year is contracting by 0.1% negative current to 3% last year's reading. Euro inflation year over year is contracting by 0.2% negative current to 2.6% last year's reading. Japan inflation year over year is expanding by 0.6% current to 2.8% last year's reading. UK Britain inflation year over year is contracting by 0.6% current to 3.4% last year's reading. Germany inflation year over year is expanding by 0.5% current to 2.5% last year's reading. US inflation year over year is expanding by 1.2% current to 3.2% last year's reading. Canada inflation year over year is contracting by 0.1% negative current to 2.8% last year's reading. China inflation year over year is null by 0% current to 0% last year's reading. Italy inflation month over month is contracting by 0.2% negative current to 0.1% month over month. France inflation month over month is contracting by 1% current to 0.8% month over month. Eurozone inflation month over month is contracting by 1% current to 0.6% month over month. Japan inflation month over month is null by 0% current to 0% month over month. UK, Britain inflation month over month is contracting by 1.2% current to 0.6% month over month. Germany inflation month over month is contracting by 0.2% current to 0.4% month over month. US inflation month over month is contracting by 0.1% current to 0.24% month over month. Canada inflation month over month is contracting by 0.3% current to 0.3% month over month. China inflation month over month is contracting by 0.1% negative, current to 0.2% month over month. Summary: the majority of countries in this chart are experiencing deflation year over year, with only dissented Japan, Germany, USA, China on the cusp of 0% movements. The rest had positive inflation increase, meaning consumers had to pay more for goods and services in the current year than they did in the previous one. Next, month over month, only Italy and China had deflation, which with the rest of the countries experienced inflation not producing economies had deflation with the rest of the countries experienced deflation not producing economies, productive economies, stating economies growth is slowing. Okay, economic indicators, lagging indicators, trail economy, trail economic action in both cases confirming a trend cycle. Labor cost. This measures the cost of labor input required to produce 1 unit of output and equals labor compensation in current dollars divided by real output. It is often calculated a ratio of labor compensation per hours worked and labor productivity. Reflects on clients. This is good to know as an investment dealer or broker as it may dictate which direction economy orders are progressing and ascertain deliberating if individual stock equity is going bullish or bearish. Italy labor cost is expanding from 106.40 current to 106.90 month for month reading, November, etc. France labor cost is expanding by 118.20 current to 119.40 month for month readings, November, etc. Eurozone labor cost is expanding by 1.7%, 107.4 current to 117.9 month per month reading November, etc. Uh, UK Britain labor cost is expanding by 115.8 current to 1.1770 month per month reading November, etc. German labor cost is contracting by 124 current to 126 month per month reading November, etc. USA labor cost is expanding from 119 current to 120 month per month reading November, etc. Canada labor cost is expanding by 131 current to 131 month per month reading November, etc. China labor cost is expanding by 64 current to 68.3 month to month November, etc. Summary. In every country in this chart, labor cost is increasing except Canada as Canada a null increase. So employees is receiving more per hours worked. Wages seem to be increasing. That is a good sign for persons working and persons working already. Since deflation is already happening in major economies of the world, the economy has more purchasing power and supply is more cheaper, motivating people to spend more. Consumer sentiment, which is good for sellers of products. Economic indicators, lagging indicators, trail economy action, in both cases current a trend. Unemployment rate. The unemployment rate measures the number of people actively looking for a job as a percentage of the labor force. Reflects on clients. This is a good to know as an investment data broker, as it may dictate which direction the economy orders are progressing, and assertion delivering if individual stock equity is going bullish or bearish. Unemployment rate, number of unemployed persons expressed as a percentage of the labor force. The unemployment rate for a particular group, for example, age, sex, marital status, is the number of unemployed in the group expressed as a percentage of the labor group force for that group. Italy unemployment quarter over quarter is null by 7.2% current to 7.2% month over month. France unemployment quarter by quarter, fourth quarter 2023 is expanding by 0.1% to a current 7.5% month over month. Eurozone unemployment quarter by quarter over quarter is contracting by 0.1% negative, current to 6.4% month over month. Japan unemployment quarter over quarter is contracting by 0.3% current to 2.6% month over month. UK Britain unemployment quarter over quarter January quarter 4 2024 is expanding by 0.1% current to 3.9% month over month. Germany unemployment quarter over quarter is null by 0% currently to 5.9% month over month. USA unemployment quarter over quarter is expanding by 0.2% current to 3.9% month over month. Canada unemployment quarter over quarter is expanding by 0.1% current to 5.8% month over month. China unemployment quarter over quarter is expanding by 0.1% current to 5.3% month over month. Summary: Eurozone and Japan is the only two countries experiencing contraction in unemployment. Italy and Germany are experiencing non-movement in unemployment. The rest of the countries are experiencing an increase in unemployment. So this dictates that more people are being hired in the Eurozone, Japan, Germany, and Italy is relatively unchanged, and the rest of the countries are France, China, Canada, etc. are losing employees. The rest of the countries have high unemployment and is indicating trough, indicating most industrial countries in the world economies forcing recession to reduce inflation. And recovery will come next. Good opportunity to buy low if it hasn't already passed. And stocks will trough and a big expansion instituted by government to spur economy and introduce new wealth and need for employees. Balance of payment, international finance and trade. Reflects on client. This is good to know as an investment dealer broker, as it may dictate which direction economy orders are progressing and assertion delivering if individual stock equity is going bullish or bearish. Balance of payments. The balance of payments is a detailed statement of the country's economic transactions with the rest of the world over a given period, typically a quarter or a year. The balance of payments has two main components: current account and the capital and financial account. Italy balance of payment year over year is contracting by negative 8.843 current to 1.995 euro billions last year reading. France balance of payment year over year is contracting by 0.9. It's contracting by negative 9.26 current to 0.577 euro billion last year's reading. Eurozone balance of payments year over year is expanding by negative 78.7846 current to negative 5.64620 euro billion last year's reading. Japan balance of payment is year over year is expanding by negative 1.381 current to negative 0.379 yen billion last year's reading. UK Britain balance of payment year over year is expanding by negative 2.653 current to 21,177 pounds. 21,177 pounds last year's reading. Germany balance of payment year over year expanding by negative 32.161 current to 2.974 euro billions last year's reading. Summary: the countries on this chart are saying that all these countries in question are contracting. From last year seeing a deficit numbers are in the low millions for all current accounts in questions, meaning it is running a deficit in these countries that year. Think of the current account as what we spend on things and the capital and financial accounts as what we use to finance the spending. During a given year, if the Canada buys more goods and services from abroad than it sells, it will run a current account deficit for the year. It will need to sell more assets to finance the spending, which means running a capital or financial account surplus. Alternatively, it will go into debt. Current account, international finance and trade. Reflects on client. This is good to know as an investment broker as it may dictate which direction economy orders are progressing and ascertain deliberating if individual stock equity is going bullish or bearish. Current account. This account records the imports and export of goods and services between Canadians and foreigners, as well as net transfers such as foreign aid. The current account is sometimes called the trade account in the financial press. Account is encumbered in the balance of payments alongside capital and financial accounts, including economic transactions with the rest of the world, imports exports between home countries. Italy current account and month over month is contracting by negative 22.9 current to negative 1 billion 91 million euros month over month. France current account month over month is contracting by negative 763 current to negative 983 million euros month per month. Eurozone current account month per month is contracting by 14.82 current to 27.84 billion euros month per month. Japan current account month per month is expanding by 2,723.64 current to 438.18 Japan billion month over month. UK Britain current account month over month is contracting by negative 23.968 current to negative 21.2 Great Britain pounds month over month. Germany current account is expanding month over month. Germany current account month over month is expanding by 29.7 million euros month over month. USA current account month over month is contracting by negative 194.81 United States dollars current United 194.81 billion USD current. Canadian current account month over month is contracting by negative 1.62 billion Canadian dollars month over month. China current account month over month is expanding by 647.805 current to 552 hundred of millions of yen. I repeat, that's in USD for the China current account. Summary: most countries are showing continued improvement in the current account, suggesting that countries is continuing to show growth. Saying the majority of countries in this chart are exporting less than previous. France is sputtering in gently, but the rest of the native countries, UK, England, USA, and Canada, will rebound in next year, if not after the year after 2024, 2025. Where the central bank suggests they will be entering a growth expansion phase, recovering from soft landing or mild recession. Another metric showing positive signs for those countries. Valuation.